Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Taylor Schrantz, and together we bring you the Morning Call Express. Now, Scott, with 3 weeks rally underway, do you think we could have 4?
I do think we could have 4, but I think at this stage of the rally, it's going to be much more selective. We've been now 3 weeks strong. We've had a major move off of that October 4th reversal day. It's almost been about 15% off those lows, depending on what indice you look at. So when we come into this week where we have major economic news coming out, we have earnings still rolling along, and we had no conclusion, which we didn't think we were going to get a conclusion to the European crisis just all of a sudden on Sunday, but now at least they're making the emphasis on Wednesday. So what does that do? That gives market participants a little bit more leeway to just say even move around the markets going into Wednesday and doing exactly or whatever they want to do. So for me, I'm going to continue to watch the price action. I'm going to continue to watch the leading groups, the sectors, to figure out what the next move is and not really pay attention to the headlines, because everyone paying attention to the headlines, they don't want to be in the market. They want to be short the market. They don't understand why it's going up, and they're frustrated pulling their hair out. This has been like the most unloved market rally I've seen in a long time. And rightly so, because there are a lot of problems out there, but there might be problems in the economic environment. But if you look at the chart here that I'm going to show you, it looks technically fine to me. Let's take a quick look at the chart. Terrell, this is the S&P. This was that Tuesday we just talked about. This is when it broke through the lows, came back above. This was the day the bears lost control. From there, you had a quick little move up, showing you that people wanted to get in that snapback. And then what happened here was very important. This was your inside consolidation. This is when market didn't pull back to the lows. It didn't fall apart. Buyers came in. Then we broke this small descending trend line and then continued to the upper end of this range. Now, how many times did you hear everyone talking about, is this rally for real or is this just a range trade?
Exactly. Yeah, I think everyone's wondering, are we going to follow through this week? You know, are we going to head back to lows? Where are we going to go from here?
Right. At this point, I don't think it's really that important. What's important is how you handled the first 3 weeks of this rally, because there was a lot of money to be made. Some people fought it, got short, are very bitter and upset. And then some switched gears because a lot of us were bearish at that bottom. But once you had that day to take notice, you had to switch gears and embrace the volatility instead of just fighting. And if you take one more look at this chart of the S&P, you'll even see another move. So after this big move off the lows, everyone wants to know, is this for real? Kind of continue? We didn't pull in again. Yes, it was a little choppy in the mix here, but we held that 1190 area. We didn't even pull down to the 50-day. And then on Friday, we broke through that 1225, closed around 1238, 1240. And I think the next real resistance is going to be from about 1245 to 1255. And we could see that resistance by Wednesday. So, you know, you have to not fall asleep behind the wheel, but stay in control.
Right. Okay, Scott, so let's go to Sector Spotlight. What's been strong this week? What's leading us into this rally if we get one today?
Well, what's been good is in the sectors, we've had participation from sectors we haven't had in a while. One of them being the banks. We talked about banks last week like so in depth when we had Goldman coming out, Bank of America coming out, JP Morgan, and they didn't report great numbers, but they didn't have to. They were already crushed, and they actually rallied on that. So if you take a quick look at the XLF, you'll see that, you know, this is when we talked about it. If you guys remember, you know, it broke above this 12. I said as long as it stays above 12, you know, it could act decent and get some follow through. Well, on Friday, we made decent highs here. For some of the gauges that we had, you know, were the day that Bank of America and Goldman Sachs came out with earnings. We talked about Goldman Sachs. If you look at this chart here, you'll see we had that 98.50. Remember this? I had it here for a reason, because look at this downtrend. You have a downtrend. We broke above. It's flagging again. What I think will be interesting, if can this make an additional move? I am going to be on radar that if this thing starts to break back above 104, 105, we could see, you know, above 110, and this would equate to a much bigger rally in the financials, because you're seeing the same type of pattern in your JP Morgan. It held higher. Bank of America even held a bit higher. So as long as these banks just stay in the game and continue to just hold in there an inch higher, I think it'll be very, very positive for the overall market.
I agree, and it's been nice being able to trade the banks again.
Yes, and actually buying them and not just, you know, doing it for a day, day and a half. You can stay with them.
Right. So what about the retail sectors?
The retail group has been unbelievable. This has been actually a leader, not just a headwind that turned a little bit. This group is near the highs. Look at the RTHs right here. People want to see where there's a rally. Look at this. I showed you the S&P. The S&P went down to the lows. RTHs held higher and then powered through. This group is strong with Walmart, Target. You know, this stock or this group is someplace where people have been getting alpha. Everyone wants to look for alpha. You know what? Look for relative strength. In retail, there's been alpha.
It's been pretty amazing. You know, people are still spending during all this, you know, economic news, so it's pretty amazing.
Markets do that.
Yeah.
Markets want to confuse as many people as possible. And you know, in the trenches, we're also going to talk about stocks that actually reported earnings and have additional setups for follow-through. If you take a quick look at Google. Google came out with numbers. I think this will be a good telltale. Gapped up, holding here. If this can get above 599, 600, you're going to see it move back to 600, and hopefully it'll be a different type of setup than we saw here. Remember, this was the last time it had earnings, went up and then failed. Another thing to watch is see if that composure changes. Another stock I'm going to be following for follow-through is ISRG. Same type of thing. Good earnings, big gap up, going sideways. This goes above 420 to 425. You're going to see new highs. So what you need to do here, Taylor, is you need to see composure switches. You need to see what acts different, what acts better. And I know high beta tech's been a little weak. We're going to see what that, I would just say, equates to. But for right now, the pull-ins have been shallow. The retracements have been almost non-existent, and we've had enough participation from all the leading groups to support this rally. The question is how much higher? I think 1245, 1255, a level to take some profits, because you can take profits along the way. And then we could still see that 1275 to 1300 plus as long as they say something decent on Wednesday. I don't think they come up with a grand solution, but just steps in the right direction.
Well, it's an exciting time, so hopefully we can get more into that in the morning call later on this evening or this morning. So that's been the Morning Call Express. I'm Taylor Schrantz.
And I'm Scott Redler. We'll see you in a little bit with the Morning Call full version.